You know that sinking feeling when your bank freezes your account out of the blue, or when your subsidy just vanishes without a trace? Well, those days might finally be behind us. The Reserve Bank of India is shaking things up, and the latest KYC update rules are here to make banking a lot easier for all of us. And yes, even your neighborhood kirana store is about to become part of the solution. How? Well, let's break down what's changing and why it matters. First, a bit of context. The RBI noticed a serious issue. Millions of accounts, especially those tied to government schemes like DBT, EBT, and Jan Dhan, were getting blocked just because the KYC update didn't happen on time. People missed out on subsidies, accounts got frozen, and in many rural areas, things came to a standstill. So the RBI decided enough is enough, and here is what they are doing to fix it. First, no more surprise account freezes. Banks now can't just freeze your account without warning. They have got to send you 3 advanced reminders before your KYC is due, and at least one of them must be by post. If you still don't update, they'll send 3 more reminders after the deadline, again with at least 1 physical letter. Now, each reminder must clearly explain what you need to do, your options, and the consequences. And also, banks must keep a digital log of all reminders to prove they actually reached out. Second, your kirana shop can now help with KYC. Yes, you heard that right. Local business correspondents, which includes kirana shops, NGOs, self-help groups, and microfinance workers, can now help you update your KYC. If your details haven't changed or you have just moved house, you can self-declare the update. The BC will collect your documents and submit them online to the bank. You'll get a confirmation once it's processed. Super handy for remote and rural customers. Just remember, the bank still holds final responsibility for keeping your KYC up to date. Third is extra time for low-risk customers. If you are a low-risk customer, here is some good news. Even if your KYC is overdue, the bank can't shut down your account right away. They've got to keep it active till at least 30th of June 2026 or a full year after your KYC due date, whichever comes later. Fourth, special focus on rural India. The RBI is also asking banks to set up KYC camps in rural and semi-urban areas, run awareness drives to help people understand what's needed, and most importantly, show empathy when dealing with delayed or frozen accounts. Because financial inclusion doesn't mean much if people can't access their own money. So what's really the takeaway? The RBI wants to balance security with convenience. Yes, KYC is still mandatory, but now it's easier, fairer, and more people-friendly. So the next time your bank sends you a KYC reminder, don't ignore it, but also know you have got better options and more time. And if this video helped, hit that like button and subscribe to Business Standard for more such explainers that decode banking, finance, and policy without the jargon. Stay safe, stay smart.
Want access to Business Standard's premium insights? Join our exclusive LinkedIn communities and connect with top voices in the BFSI space on topics that matter to you.